Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how their experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're taking a comprehensive look back at the 2024 mortgage market in Canada, a year that marked significant shifts in both policy and economic conditions. The year began with the Bank of Canada reversing its previous trend of rate hikes, opting instead for an easing cycle that saw 5 consecutive rate cuts. This brought the overnight rate down to 3.25% by the end of the year, a welcome relief for many variable rate mortgage holders. Inflation, which had been a major concern, cooled to 2.0% by year-end, providing some respite for consumers. However, despite these positive economic signals, affordability challenges remained a significant issue for many Canadians. On the regulatory front, several major changes were implemented to ease housing pressures. Notably, the government increased the insured mortgage purchase price cap and allowed first-time buyers to access 30-year amortizations, offering more flexibility to enter the housing market. The housing market saw a rebound by the end of the year, with home sales and prices climbing. The average home price rose to $694,411, marking a 7.4% increase year over year as of November. However, the year also witnessed a mortgage renewal wave, with approximately $251 billion in mortgages renewing at higher rates. This led to average monthly payment increases estimated between $400 and $500, presenting a challenge for many homeowners. On the corporate side, we saw significant mergers and acquisitions that reshaped the landscape. National Bank completed its $5 billion acquisition of Canadian Western Bank, expanding its influence in Western Canada. Similarly, online lender Nesto acquired CMLS Group, enhancing its market presence and product offerings. These moves indicate a trend towards consolidation in the mortgage industry, potentially leading to more competitive offerings for consumers. Policy changes also took center stage, with the removal of the stress test for uninsured mortgage switches by Canada's banking regulator, OSFI. This decision, however, did not come without confusion within the industry, as some lenders, like BMO, chose to reinstate the test while exploring alternative approaches. Additionally, the government extended the foreign buyer ban until 2027, reflecting ongoing efforts to stabilize the housing market. The year in review wouldn't be complete without mentioning the performance of Canada's big banks and mortgage companies. While most banks saw positive stock performance, with Royal Bank of Canada and CIBC showing significant gains, TD Bank experienced a decline. In the mortgage sector, companies like Equitable Bank and First National posted modest increases, highlighting a mixed year for financial entities involved in the mortgage business. As we reflect on 2024, it's clear that the mortgage market experienced transformative changes, driven by both economic factors and strategic corporate maneuvers. These developments set the stage for what could be an equally dynamic 2025, especially as we anticipate further rate adjustments and policy shifts. Stay tuned as we continue to bring you detailed analysis and updates on these evolving trends. Now let's shift our focus to the housing market as we prepare for a potential comeback in 2025. With lower interest rates and regulatory changes, there's optimism that the market will rebound after a sluggish 2024. The Canadian Real Estate Association recently reported a significant 26% year-over-year increase in home sales for November, marking a strong close to the year. This suggests pent-up demand is beginning to unleash, with economists and real estate agents anticipating continued strength in market activity. The Bank of Canada's recent interest rate cuts have been pivotal, bringing the policy rate down to 3.25%. This move, coupled with favorable buyer rules, is expected to bolster the market despite ongoing affordability challenges. For instance, the maximum mortgage amortization period for first-time buyers was extended to 30 years, and the insured mortgage cap was raised to $1.5 million. These measures aim to make homeownership more accessible. Christopher Alexander, president of Re/Max Canada, noted that first-time homebuyers are re-entering the market, driven by these changes and the anticipation of further rate decreases. However, he cautioned that while the initial rate cuts prompted some activity, many buyers held off, waiting for even more favorable conditions. This strategy, he warned, could lead to increased competition and rising prices as rates continue to drop. In Ontario, Hamilton broker Mike Heddle from Royal LePage State Realty expressed optimism about 2025, predicting a shift towards a balance to sellers market. He observed an uptick in offers, suggesting growing buyer confidence that could carry into the new year. However, TD economist Rishi Sondhi warned that while pent-up demand might initially boost sales, it could be exhausted by mid-year, particularly in regions with significant supply backlogs like Ontario and British Columbia. The federal government's recent mortgage rule changes are also expected to support the housing market. These include the removal of the stress test for uninsured mortgage switches, which Rates.ca expert Victor Tran believes will fuel a hot spring market. However, Tran noted that while affordability is improving, qualification remains challenging, and house prices may need to decrease further to stimulate substantial activity. As we look to 2025, the combination of falling interest rates, economic growth, and regulatory measures presents a promising outlook for the housing market. But as Victor Tran wisely points out, it's essential for buyers to purchase within their means rather than trying to time the market. This approach can help avoid the pitfalls of rapidly changing market conditions. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.